Hi everyone, welcome to today's video. So on today's video, I'm going to speak about my buy on dips live investment. So I had purchased these stocks on Thursday. I'm shooting this video on Friday. So I will show you the list of stocks and then I will explain you the rationale as to why have I purchased these. These are buy on dips for me. These are not fresh investments. I had already made previous investments in all of these stocks. I'm buying these stocks more because the levels have come down. So which stocks am I talking about? Here is a list. So people who want to drop off now can drop off now. Now I will start discussing some concepts as to what is the strategy for buy and dips, and in case you are looking to purchase or aggregate some stocks in this fall. So how you could think about it. Getting that conceptual level clarity is very, very important. So I am going to focus the video from that particular perspective. Also, a lot of you ask me that Akshat, how is it that you are able to invest so much money in the stock market? The reason and rationale is fairly simple, that I actually keep a good track of my money. I keep a handle on my spending. I invest a lot whenever I get the opportunity. And this is important for any of us to do. So from that particular perspective, I will introduce you to Jupiter. It's a wonderful app. It allows you to keep a better track of your money, spend it wisely and invest it wisely by following a goal-based investment driven methodology by following pots. So do check the links in the description box and let us get the video started. So before I get into the nitty-gritties of the stocks that I've purchased, let me give you a very quick overview of how I think the market is behaving. So there are three very important points that I would like to draw your attention towards. One is that I feel that the market is consolidating sideways. This is something that I have been saying for quite a while now, and I feel that there is a very strong chance that the markets are going to consolidate for a substantial future. So sideways market simply means that rather than going up or down too much, markets are going to move in a certain range like up and down and up and down. So this is already happening and it might continue to happen for a foreseeable future. So which brings me to point number two, that during such a scenario, I am not being adventurous with my investments. As you can see from this list, I am not taking positions in average type of companies. I am buying cash flow oriented businesses that have a known brand that I know will survive the consumer price rise that is happening, that will be able to price their products higher. Now, why is this such an important thing? This brings me to point number three, that we have moved towards a high inflation oriented environment. Entire world is grappling through this high inflation problem that we are currently witnessing. Governments are trying very hard. Corporates are raising the rates. All the major companies are trying to pass on the prices to the consumers. So all this stuff is happening and this high inflation problem is here to stay. It's not going away. In fact, this problem is aggravating with time. 2022 will be a very high inflation year. That is my perspective. So now this is the hypothesis with which I'm approaching my investments in the stock market. Now, like any other investor, I can be incorrect. I can be correct. All those things remain to be seen. But yes, this is the methodology. This is the framework I'm adopting and I'm taking bets in the market accordingly. This brings me to the second specific concept that I want to talk about on today's video, which is the concept of buying on dips. So there is a Twitter thread that I had written. You can go and read it. And there are some important points that I would quickly cover from this thread. So very quickly, please understand the meaning of buy on dip. So buy on dip simply means that if a stock you have purchased at 220 and if it falls to 200, then you end up buying it more. If it falls further, then you buy even more. Now, this is a very dangerous strategy. It is very important for you to be careful not to overexpose yourself to one particular stock. It should not happen that you have invested 50, 60, 70% of your portfolio on one single stock and something bad happens with that stock and then you are bankrupt. So please use this buy on dip strategy a little bit sensibly, otherwise you will make insane amount of loss in the stock market. Now, the most important thing that I will tell you about buy on dip strategy is that whenever you are doing this buy on dips, you should do it with some kind of logic in place. Now, what is meant by that? For example, don't just randomly go and start purchasing stocks because they are falling. There are hundreds of stocks that are falling in the market right now. It does not mean that you should go and aggregate those stocks like a crazy person. No, please don't do that. There should be some sense, some logic as to why you are purchasing something. So let us pick that from an example. So right now there is a lot of chatter. A lot of you have reached out to me asking me that, Akshat, what are you doing with HDFC, AMC and EMC stocks? Are they forever going to become dust? The answer is no, and it's not as if that there is some fundamental problem with HDFC, AMC stock. A lot of people are saying that HDFC AMC is losing its business share, this, that. Okay. First and foremost, almost every single AMC stock has fallen, whether it is Naam India, whether it is Aditya Birla Sun Life, all these AMC stocks are falling and they have been falling for the last 1.5 months quite aggressively. So there is no panic per se at a structural level. Now ask yourself, if you are buying more of these stocks on dips, Should you be doing it or not? Now, this is not a buying and selling recommendation. Please do your own due diligence. I'm just presenting facts to you. So first and foremost, if you take a look at AMC industry, the penetration rate of AMC industry is roughly 11% in India, right? In developed economies, 11% of GDP in India is covered under AMC. So that is a very low number. This number is close to 100% for an economy like the US. So the point is that this industry is deeply underpenetrated right now. Similarly, the product is very sticky. It's not as if that it's very easy to switch from one AMC to the other. Once you have started your SIP, customers generally do not switch. Also, check finally about the high profit margins of this industry. If you go study the chart patterns, and I'll put the chart pattern for HDFC AMC here, you can take a look at the operating profit margin of something like HDFC AMC. It's a highly profitable business. Even if HDFC AMC loses a lot of share, but the entire market itself grows, even as a losing competitor, it is likely to make a lot of money. So please do not be scared. There is nothing fundamentally off. This is at least the logic. Now, I'm not saying that go and invest, go or not invest. That is completely your call. But whenever you are executing this buy on dip strategy, at least have some logic, some rationale, some data in place. So now let me give you some commentary around 4 or 5 good stocks that I've purchased. Now I can't cover all of these. In case you have comments or concerns, do comment below. I'll make a separate video on those topics. But let me quickly cover 4 or 5 key stocks. First and foremost, let us talk about Nestle. Do you think that this is a good buying opportunity? I personally feel that it is a decent buying opportunity. Now, why do I say that? Let us very quickly take a look at the technical parameters. So from its top, Nestle has corrected by roughly 11-12%. That is where it is currently standing. And this is a major fall for a monopoly stock. For example, here is a chart for you and you will see that Nestle has 96% share in infant cereals. It has 69% in instant pasta. It has 64% share in chocolate segment. It has 70% share in condensed milk. So this is a cash rich business. There is absolutely nothing wrong with the business. It is available at somewhat of a 10% discount. Now you would say, Akshat, okay, if Nestle is such a great stock, why did it fall so much? Okay. There is specific reason for that also. And here is a paragraph for you to read and understand. This is the most important part, that unless you understand this, buying something into Nestle will not make any sense. Now, first and foremost, you can notice that Nestle was less impacted due to high rising input costs. So this is the inflation argument that I was making earlier, that from 2020 end onwards, the inflation has been really high. And it will continue to be high even this year. So this year, there is a very good chance that FMCG stocks are not going to skyrocket. But that does not mean that these stocks are bad. On every dip, I'm going to continue to buy because this inflation situation one day will come under control. And whenever that happens, it will start reflecting into quarterly results of all these major companies like HUL, Nestle, Dabur, etc. So now is a good time to make this investment and you are not likely to reap this reward in 2022. Please be mindful of that. This is illustrated from the last paragraph. The management has said that the inflation pressures are likely to be more acute in 2022 with global commodity prices of coffee, milk, oils and packaging up in high single digits. So yes, short-term pain is there in FMCG, but long-term there is nothing fundamentally off with FMCG stocks. The second stock that I had purchased more is Pidilite and I had purchased this today also. So very quickly, quick word on technicals. So the stock from its top has fallen by 11%. This is a great time to purchase something like Pidilite for the simple fact that industrial demand is picking up. So something like Pidilite is going to be less impacted. Now Pidilite again, like Nestle, is a monopoly and here is a list of things in which Pidilite is a monopoly. So to cut the long story short, something like Pidilite is much more resilient compared to FMCG right now. So it will bounce back faster because of the increased industrial demand and housing sector demand that is coming up. So there is a very high likelihood that something like Pidilite is going to give you good returns even this year itself. Now again, you might ask me that, okay, Akshat, if Pidilite was such a great stock, why did it fall by 11-12%? Okay, so here is a paragraph for you. So essentially what happened is in 2021 September quarter, the price of raw material inflation again, and there is something called as vinyl acetone monomer, which is an input that is used by Pidilite. Now due to supply chain disruptions, here the price of this monomer went haywire, due to which the profit margins for Pidilite came down. But here is a very interesting paragraph. Despite the price increases, the company has gained market share from unorganized and regional players given its ability to manage processes and supply chain. So essentially, to cut the long story short, this high inflationary environment is not bad for companies like Pidilite and Nestle. They will continue to gain even more market share in this high inflationary environment. Why? Because they have the ability to pass on the price increases to their customers. Now comes the third and the most interesting stock. This is Dr. Lal Path Labs. And if you actually take a look from its top, the stock has corrected quite a lot. So from its top, the stock has roughly corrected by 33%. So this is a big fall for a stock like Dr. Lal Path Labs. But before I give some commentary around this stock, let me show you some numbers because this is very important. So if you take a look at the sales figure, the sales have been constantly going up. Now you will get super impressed that from 2019 onwards, the company has been on a mad growth path. This happened to a very large part due to COVID, that there was temporary surge in terms of testing that was done and people becoming more aware about their healthcare choices, all that stuff. So this entire business of organized pathology lab, it kicked up. So which kind of helped Dr. Lal Path Labs gain more market share and become more competitive. Now with the COVID weaning off, so word of the day today is weaning. Let me know what does that mean. So with the COVID weaning off, so it's not as if that these companies are going to stay forever on this mad growth path. The growth will decelerate, and that is precisely what has happened, and that is the reason why the stock fell by 33%. So that presents a great buying opportunity now because the stock has corrected by 33%. It's a net profitable business. If you take a look at the cash flows, so take a look at the cash flows, it has been positive almost every single year. And if you take cash flows from operating and then look at investing, this is leading to something called as organic growth of the business, that whatever money they are making from the business, they are putting it up to grow that business further. So from that particular perspective, Dr. Lal Path Lab is a very resilient business. There is absolutely nothing wrong with it. Short-term pain is there because the growth is slowing down because yes, COVID 2020 was a catalyst which accelerated the growth of almost every healthcare company. Now that growth is moving back towards a sensible level. But fundamentally speaking, there is nothing off about the company. Here is a very good paragraph that will help you win more trust on this company. And the paragraph says that Dr. Lal Path Lab has grown EPS, earning per share, by 30% per year, compounded in the last 3 years. It's not surprising to see company trading on very high multiple of past earnings. This is a very good thing because it shows the power of organic businesses, and there are very few organic businesses right now in India that are doing so well as compared to Dr. Lal Path Labs. Right, now let's finally talk about the fourth and final stock that I want to cover today, and it is Bajaj Finance. I had done a separate video on this topic about Bajaj Finance. At that point in time, the stock moved by 7-8% up, then it fell again due to the entire market being corrected. So if you check Bajaj Finance from its top, the stock is down by roughly 15%, and Bajaj Finance is a stock, if the market moves up, Bajaj Finance moves quite a lot. What is the reason for that? That Bajaj Finance is a very desirable stock. There is a lot of demand for this stock. It's not as if that if the company does something well, then only there is demand for the stock. There are certain stocks in which the inherent demand is very, very high, and Bajaj Finance is one such company. Everyone thinks that if the market is going to do well, then Bajaj Finance has to do well. So from that particular perspective, Bajaj Finance is a good stock to own. Now, I will not get into the numbers and technicalities of Bajaj Finance because all of us understand that it's a good company to own. There is absolutely no fundamental problem with Bajaj Finance, how they have grown their loan book, how they are giving out credit financing. So all that I'm not going to touch upon. But there is a very important message that I want to give around Bajaj Finance, and the message is this, that Bajaj Finance is a very volatile stock. Especially in today's circumstances, if you are moving in a sideways market, you should only look to aggregate Bajaj Finance when it falls. So buy something like Bajaj Finance on dips. That is very important because, for example, if Russia and Ukraine get into a war, there will be short-term pain for stocks like Bajaj Finance, and every time there is some kind of negative news, stocks like Bajaj Finance are likely to fall the most. So in this sideways market, there will always be opportunities for you to aggregate stocks like Bajaj Finance. So keep buying them in small quantities on every dip. So that is precisely what I'm doing. So in summary, right now my strategy is very simple, that I'm only investing in good businesses. That's it. I'm taking a buy on dips approach, and right now my levels are that around 17,000 mark, I will aggregate a lot of stocks. And if the Nifty goes up to 18,500, then I will wait and watch. I will not aggregate too much at that juncture itself. Again, these are not investment advice. Please do your own due diligence and please take positions as per your understanding. I hope you enjoyed the video, and I will see you tomorrow.